Hey guys, Jonathan here with Florida Turf Pros. In this video, I want to share how I go about paying myself and then how I used to pay myself. So whether you're just starting out in business or maybe you have some years under your belt and you're kind of getting mixed up maybe in the way to separate your personal finances from business finances, maybe that's starting to get a little bit messy. I want to share with you what I've done and what has worked for me, so maybe it'll help you navigate some of that stuff. Whenever you first start out and you get your business license and everything, you're either going to be a sole proprietor or a single member LLC. Very few of us start out as a corporation, so 99% of us are going to be in that category of a sole proprietor or a single member LLC. Now, the important thing to know is that if you are an LLC, even though you are viewed as limited liability corporation, even though that you are viewed as a corporation, whenever it comes tax time, the government views you as a sole proprietor. So for taxes, there is no differentiation whether you are a sole proprietor or a single member LLC. And the reason that is significant is because you are paying all the taxes that you would pay, your self-employment taxes like your Social Security and Medicare and all that stuff. All the earned income from the business, you are paying the Social Security and Medicare taxes on all of that profit. So again, whether you are a sole proprietor or a single member LLC, whenever it comes tax time, you are basically go to your personal income tax return, and on Schedule C, profit or loss from business, you fill that in, and then you're paying Social Security and Medicare tax on all that stuff. Again, whether you are a single member LLC or a sole proprietor, for tax purposes, it's all viewed the same. Now, what did I do whenever I was in that situation? I started out as an LLC. Here's what I did whenever I first started to keep everything separate, and it really worked well for me. It was the rule of thirds. So 1/3 went into my personal checking account every pay period. 1/3 stayed into the business for business operating costs, and then 1/3 went into a tax savings account. Again, so just make it simple. Let's say you had $10,000 a month. 3,000 would go into your personal checking account. 3,000 stays into your business account for operating expenses, and then 3,000 is set aside for taxes whenever tax season comes, because taxes do roll around and you are going to have to pay taxes on all that money that you've earned. So that really worked well for me whenever I was a single member LLC. And again, whether you are a sole proprietor or a single member LLC, that rule of thirds will work, and that is a good way to at least get you started in having money set aside for yourself personally, to pay personal expenses with, keeping the business income separate, or the business operating account separate, and then tax account separate. So if you do that, that will get you off on the right track rather than constantly be mixing up your personal and your business expenses. There's a lot of trouble you can get into that when you start doing that. So I would just encourage you to make sure you're separating that out in some form. And the way that I did that was the basic rule of thirds. Personal checking 1/3, business operating account 1/3, and tax savings. Now that's whenever we were a single member LLC. What are we doing now? Well, now I have since taken something called the S election, which lets you be into an S corporation. So we started as a single member LLC, and now we're an S corporation. Now, what is the advantage of an S corporation? Well, the disadvantage of an S corporation is, one, it's more expensive to operate an S corporation every year, and there are costs associated with switching yourself from an LLC to an S corporation. Well, why would you be an S corporation if you were already a single member LLC? And here is the beauty of the S corporation. And again, it does not make sense to be an S corporation unless you have reached a certain amount of revenue in your business. The advantage of an S corporation is this: I can pay myself now a small salary from the business. We did this last year. I took the S election last year, and I paid myself a small salary. So basically, the business pays me a small salary for what I do, and then everything else that is left over in the business, I do not pay self-employment taxes on that. Again, the self-employment taxes being your Social Security, Medicare, and stuff. So, for example, let's say if I pay myself $15,000 a year or $20,000 a year myself, that's what the business is paying me, $20,000 a year. I get a W-2. I get a check every week. W-2 is coming into my personal checking account. Then all that other money that's above what I am paying myself personally is not taxed for Social Security and Medicare. Now, if you don't understand that, let me say that again. All the money that is above and beyond what you're paying yourself personally, from a W-2, from a salaried standpoint, everything above that in the business, you are not paying self-employment taxes on. So the advantage to that is, obviously, you are saving a boatload of money in taxes and not having to pay the self-employment portion of all that business. So, and just this is a gross generalization. Let's say your business did $100,000. Well, $20,000 is what you earned. You're W-2ing yourself for $20,000. $80,000 is left in the business. That is the businesses, all right? You're going to pay business profit. You're going to pay taxes on the profit in that, but you're not paying Social Security and you're not paying Medicare tax on that $80,000. So when does it make sense to transfer from a single member LLC to a S-corporation? Well, the conversations that me and my accountant had was once you are profiting above about $25,000 every year, it makes sense to take the S election and transfer your LLC into an S corporation. Again, that's not $25,000 in revenue, that's $25,000 in profit from the business. Once you reach that point, then it really makes sense to look at taking the S corporation, giving yourself a W-2, and then letting the business be responsible just for the profit portion of the taxes on the business and not having the business pay self-employment taxes, okay? That's the way that we do it now. So again, whenever I first started, it was the 1/3 rule because I was a single member LLC. 1/3 went into personal checking, 1/3 stayed into the business, and then 1/3 was into tax savings. And now I take a small salary from the business. Everything that is above and beyond my salary, the business pays taxes on the profit, but I do not pay self-employment taxes on all that above and beyond my wage. So that has really, really worked well for us. And last year, frankly, the tax savings were tremendous for doing that. So if you're running into an area right now where you are, you're making a lot of money and you're getting towards tax time and your accountant is like, hey, you owe $6,000-7,000, you need to be looking at the S corporation, okay? You need to be taking a smaller salary from your business on what you're paying your self-employment tax on, and then letting the business pay taxes on the profit. It's going to be a tremendous tax savings for you. Now look, my disclaimer in all of this is, look, you need to sit down with a professional accountant. I'm giving you a gross generalization of what has worked for me and helping you to kind of navigate some of that stuff. This stuff works, man, and tax advantages and tax savings, that's something you need to take very, very seriously if you're serious about running a lawn business, all right? Now, go sit down with your accountant, ask them about the S corporation, the S election, ask them if it makes sense for you and your business. And I would venture to say, if you are a single member LLC who has been in business for a few years and you're doing pretty well, you need to start taking a W-2 from your business and really saving a lot of money on your taxes. Good luck.